The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. And let me pull a few things up for you. We'll get on started and get rolling on the show. And let me adjust my mic a little bit, maybe make it a little easier to hear me there. All right. So it looks like on the day we're up 5 points right now on the S&P. We're up 12 on the Nasdaq. We're up 62 on the Dow. We're up 4 points right now on the Russell. We're down, looks like about, 10, 20, 30 cents, depending upon the second I say it, on gold. On copper, we're up over 0.5% on silver. We're currently sitting at flat on the day. On corn, we're down about 0.5%. On soybeans, we're up about 0.5%. Oil is down, or actually up right now, about 69 cents on the day, so a little over 70% on the day. We got natural gas up over 3%. Huge move on natural gas today. Euro dollar with their interest rate announcements. We'll be talking about all that. Up 137 pips. And right now, pound dollar is up only 12. Some crazy volatility going on over there on the pound dollar. We got Aussie dollar up 34. US yen up 87. US Canadian down 27. US franc down 54. With the dollar index in negative territory. Just complete euphoria happening in the market. So, it doesn't really even make that that much sense what else going on, but there's a lot of euphoria out there right now, and market is just running. We'll go ahead and remind you real quick here at the beginning of the show to go in and make sure that you have signed up for a Nadex account. Okay, again, make sure you signed up for a Nadex account. You go to tfnn.com and click on the Nadex banner. Once you've done that, you can get a demo and a live. And let me show you the demo and the live account there. Keeps showing through. That's sort of weird. Get the demo and the live. And so right here on the live, you click on, for the demo, you click on Our Products. And then, let's see, once you click on Our Products, then you'll go over here and you'll be able to click on Demo Account. Under Demo Account, fill in your username, first name, last name, phone number, and email address. And you'll be able to see that right there. So again, username, first name, last name, phone number, and email address. And you'll be able to access that and take advantage of it. And let me show you where to get a live account at. And I'll pull that up right here so you can see it. So live account, click on Create Account, and then click on Start. Under Start, you'll fill out the form. It takes about 5 minutes to open a live account. You can open it with as little as $100. And you can trade these crazy, wild, volatile markets in the middle of everything that is going on. So, and just, take advantage of it because there's a lot of really, really cool things that you can do with the Nadex platform. And what you'll notice is you also can register for our event that's happening over here in right out of San Francisco. And right here we got this free live workshop, or San Mateo is where it's going to be located. Like I said, that's just south of San Francisco there. And so you fly into San Fran. And it's a Dynamic Trading Strategies workshop. And we're going to be out there with Nadex. And Dan Cook from Nadex will be out at the event. And he'll be there with me and Tommy O'Brien. We'll be talking about identifying trades, intro to Nadex. And we'll also be going into different areas like identifying trade setups, doing proper risk management, and just putting the whole thing together. So definitely take advantage of that. Let me, I want to try one more thing real quick, see if this will work a little better for the screen share. I think it will. And there we go. All right, so I got that up there. And fill in that form to register, hit submit, and you'll be up right there. So, not sure if that's coming through right now, but hopefully that's going in over there on the chart feed on the website there at the TFNN live TV and in the room. So, over in the den. But if you'll check this out, go in and look at it, and you'll be able to register. Again, go to tfnn.com and register on the Dynamic Trading Strategies free workshop. and you'll be able to get into that. The workshop, again, is free. Nadex is sponsoring it. We appreciate them for helping us out with that. And so let's see here. I'm sorry, we're having a little technical difficulty, and I can't handle both at the same time. I don't know what exactly is coming through there. Okay, so I'll pull that up, pull this over here, and I'm going to get this straightened out for everybody. Sorry, I apologize for the difficulties, but I want to make sure that you are able to see everything correctly if you're over there and join us on Tiger TV. So right here, what we can see is we have that. We also have the other thing that you can take advantage of is we have the free Diagnostic Box Spread Analyzer. Just click on that. You'll get a 2-week free trial. You'll get access to the deviation levels, and you'll be able to access everything that we have going on. And let's see here. Still having issues on things coming through, so I guess we just have to hold on for a minute while we figure it out. Sorry for the technical difficulties. But trying to get it working. Not sure if that one works or not. Not sure what you're seeing, but I'm clicking the buttons. Go ahead and click on Diagnostic Box Spread Analyzer. You can register and take advantage of it. But I'm sorry, I'm done with the operator and I have no idea. So what's going on? I don't know what you want me to do. All right, we'll just do the show without a screen for the next 10 minutes, and then we'll bring it back, and let me go ahead and progress and talk about the markets. So let's get to going down what we want to focus on. And what we're going to focus on right now is deviation levels and where the markets are at, because we've had a lot of things going on, and we'll also focus on the fundamentals that are happening. So let me pull up the fundamentals. We'll talk about that. We had a whole slew of fundamentals come out, and instead of seeing everything that's been coming out over the last day here, we've had a ton of fundamentals coming out, and usually we have 1 or 2, and we had 7 major impact reports come out in the last 24 hours. And so anytime you have that, that's a great trading opportunity, or it's a scary trading opportunity. I'm not sure which. It depends upon, I guess, how well you trade it, and if you use something like Nadex to limit your risk. So on Nadex over here, what we got, and I'll try one more time there, is we have, let's see, a few different things coming through, but on Nadex what we're getting is, this is killing me. We're just going to go and we're going to talk about the fundamentals. If you can see the screen, great. If you can't, we'll come back and we'll make sure we take care of it after today's show. So on Forex Factory, I'm looking over and I'm checking out everything that's going on, everything that's happened. And last night we had Aussie Dollar report come out. Aussie Dollar released their monetary policy statement. And with that monetary policy statement, we were able to see a few different things. But the big thing is they left the interest rate the same. They did have or the yen had the monetary policy statement. The Aussie had the trade balance report. It was a negative trade balance report. And what that is, it drove the Aussie down, and then it popped on back up. And so when it flew down, if you were doing, say, like a straddle spread on that trade, then you could have taken some profit on the trade, and then it started moving on back up. And in that process, you'd be able to put the two together and actually had a very small profit. If you would have left the trade on waiting for that 1-to-1, you would have lost on the trade, not everything, not your total risk, but about half your risk, because the short side would have lost, the long side would have taken a small profit. The yen, however, I went on and did a binary strangle on that one right at the deviation levels for a 1-to-1 risk reward, and I did it last night. I did it around 7 o'clock last night, and I left it on all the way through to today, right at about, I want to say it didn't even close out till around 11 o'clock. And so, holding that trade through to the end, it actually was able to make a 100% return on investment on the U.S. yen with their monetary policy statement. And going into tonight, we had, early this morning, we had the foreign currency reserves on the U.S. franc. Had a nice move on that, could have taken advantage of that easily with that and their chairman both speaking. And then we also had the European bond auctions, and that was, that caused a decent move. The minimum bid rate, barely anything. The big move on the euro came from the press conference, and that's the pattern we've seen lately. Is the press conference is the big mover, not the minimum bid rate. You could have got in on either one, but usually the press conference is the one to take, and that was an easy 100% trade right there. making 100% return on your investment on the euro-dollar trade. It did take a little while, but once it just took off. And we just saw that massive, massive move. The pound also was a great trade. It took off, made a massive move on the official bank rate. The other trade we had possibility on was the U.S.-Canadian trade. So for the 8:30 news announcement, you could have strangled or straddled that one. That was a nice, easy, quick. I wouldn't say quick, but it was a good trade. And did finally take off profit, 100% profit on that trade as well. And, depending upon how you play the trade. Now, depending on how you do the trade, you may have just got out at maybe like a 70 or 80% return on the trade. Depends on what spread, what strangle you chose, and where you got in and out. On the one I got, I think I want to say the U.S. Canadian made around, I want to say it was like 70 to 80% on average. And then, but I actually put on multiple contracts, and some of them made a lot more. So it just matters which contract you did for how the trade, finally turned out in the end. And then going on over later in the day, we also had a gold trade. That one was, okay on that trade. It really didn't move that much, though, so I wasn't real impressed by the gold one. But, out of all those trades, we had a lot of profitable trades. Couple that could have made a small profit, couple could have lost a little bit, one or two that would have lost, but only lost half if you did the spreads, the spread straddle versus the binary strangle. Now, let's talk about what we have coming up for tonight. We have the, let's look at around 6:50 tonight. There's current account of the yen. That's going to be hard to get in simply because Nadex didn't even start till 7 o'clock. So, but you may be able to see a trend moving where you could take advantage of yen movement going in through the end of the day. We also have Frank's CPI number coming out. So in the Swiss francs, so that's a easy U.S. franc trade right there. You can straddle or strangle that one if you're up at 3:15 a.m. in the morning. And tomorrow morning, we're going to have a lot of Canadian dollar reports. And it's going to start off with housing starts. And then it's going to go into unemployment change, unemployment rate, labor productivity. So you're going to have a great U.S. CAD trade lineup right there. I'd probably be looking to get in about 8 to 8:10 just to make sure that housing starts number doesn't throw everything off before you get the big numbers of the employment and unemployment rates coming out of the U.S. Canadian. And then gold also, we have non-farm employment change coming out, and so that's going to be a huge trade for you to take advantage of. The reason I say gold on that instead of an index is because since Bernanke is tied quantitative easing to unemployment, then it has a massive impact on the dollar. People wanting to know, how long will quantitative easing last. So it impacts the dollar a lot, which will therefore impact gold a lot with a very direct impact versus having other currency pairs fighting against you. And so I like the gold trades now. Anytime we have any kind of unemployment thing, even today. Even today wasn't the best one. Unemployment claims, but the non-farm payrolls was great yesterday. And then today, you have the other trade coming up. So stay right there. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Looks like we got all the technology stuff up and running for you. And so now let's pull up a few charts and walk through those and look at them one at a time. And I wanted to go in over here and break this down. Look at the 5-minute bars. And also going to go in and change a couple of the settings. So that way we can see. We'll just go into our normal bars right there. And one of the things I talk about pretty consistently on the show is we got to watch out for the New York Fed bond buying. And we had a gap today, and one of the things I was talking to some other traders today, I was like, hey, watch out for this gap because the Fed is going in and buying a lot more than they normally do. And we know when that's going to happen. It's known in advance, but most traders don't use it. They don't even know it exists. And that actually gives you an edge. One edge it gives you, it lets you know, hey, you know what, let's not short the Fed whenever it's coming out. And so today, you know, I didn't take the shorts. I actually had a short trade plan for today based on seasonality. I didn't take it simply because the Fed was doing some bond purchases. And you can see right here, you know, went in, did over $3 billion. Well, what does it normally do? Well, right here you can see they normally are doing, you know, like $1 billion, you know, or so a day versus 2 or 3 or 4 or 5 billion they do on some days. Those are the days that you really want to look at and put everything together that you want in your trading plan. You want statistics, you want fundamentals, you want seasonals, you want technicals. All right. So look at all that as one big piece of the pie, and this is a huge piece that I'm sure most people, don't even look at in their trading. They don't look at this big fundamental report right here. And, I'm always talking about news, but this is news, we have the entire calendar month right in front of us, right there at NewYorkFed.org. And you can use that every day when you trade. Okay? So you can go in and know, hey, what's going on? How's it working? And you can go back and you can actually pull the historical reports and you can see, how big of an impact does this have? It's larger than normal, and that'll help you out a lot in your trading, because you'll be able to take advantage of a lot of different things. But one of the big things you'll be able to take advantage of is just knowing that in doing this you'll be able to go, hey, I shouldn't be short today, and even though my system may say short, it may say reversal, or even though I see a gap, I shouldn't fade a gap going short. I could fade a gap going long, but I shouldn't fade a gap going short. Rarely will you see a short gap on a big buy day like this, by the way, because the big funds know it's coming. So a lot of times they're buying the market up anyway. But we have some other major days. We got the 14th is going to be the next big major day we have, and then the 15th is a major day. So those next 2 days right there on the 14th and 15th, are going to, most likely drive the market up next Thursday and Friday. So you can use that as a trading signal. But again, go back and look at it and get the confidence by seeing the history of when those bigger days happen and what happens on those days in the markets that you like to trade. See what kind of impact it has. But you can also use it as a filter to tell you, hey, when not to do something. Because, we've all had those days where, we keep thinking to go short and we keep trying to, hit that reversal, and it keeps not doing it. And this is a lot of times what's happening when that happens. And I think it's probably one of the most helpful things that you can apply in your trading. And I know ever since I've applied it, as long as I remember and make sure I look at it, then it's served me very, very well. And you can go in and pull it up again at NewYorkFed.org. So in case you're listening over on online through the radio or whatever at tfnn.mobi, click on NewYorkFed.org, then go to Markets. Now you click on temporary, that'll update every 15 seconds. So if they do like an out of the blue temporary operation, you want to be very aware of that, because that usually will result in the market going up. But also, if you look over at the permanent, then you can see on the permanent right there that how many are they buying today, and not are they buying, but is it larger than normal? And so, putting all this together, make a trading plan, tie in your technicals. That's, charts rule. Charts are king, okay? But sometimes our chart system that works, a lot of times doesn't work for a certain reason, and sometimes that reason can be known, such as like we're talking about with the bond buying, all right? And then news is absolutely important, okay? So because, like I said, news is like that bus hitting you. You basically go and you get a perfect healthy checkup on your technicals, all right, from the doctor, but then you don't pay attention when you cross the street, and the bus, slams right into you because you didn't look both ways before you cross the road. And so that's why you need to know when news is coming out. I'm not saying you have to trade it. I love trading news on Nadex. But if I'm not trading on Nadex, then I'm usually getting out of trades or tightening stops into a number. I'm not trading into a number on futures and Forex. So if you put all that together, you start to get the idea of what diagnostic trading is about. And we'll talk a little bit more about that, and we'll actually go through the charts and look at the deviations now that we got everything working. Be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And let's go ahead and take a look at some of our charts now and see, what would be the best format of tying in the deviations and everything else. So I'm going to tie that in. I'm going to open it up. And one thing, just want to remind you, let me get this on the screen. And you can go into our website on the Diagnostic Box Spread Analyzer, and you can actually get access. Okay, you can get access to these deviations. We post them every single night at 7:15. And let me show you exactly what that looks like, so that way you know how to use it, how to access it, and then you can plot these on your charts. Do it however you want to do it. But let me pull it up right here. So we got the diagnostic deviation levels, and like I said, we post these right up here every night. So that way you can see them, you can see how they work, and you can track them every day. So some people take screenshots of them. There's a lot of different things you can do. I plot them on my charts, so that way I have them, I have the record of them, and that makes trading a lot easier, obviously, when everything's just right there in front of you. And I can sort of show you what that looks like. What I'll do over here is I'll pull up the charts with it on it, and then you can see it. But what we do is we put the settlement value. The settlement is, just in case you don't know what settlement is, it's different than last trade or maybe the close you see on an intraday chart. Okay? The settlement is actually going to reflect the volume-weighted average price for you. So settlement will reflect that, and what they do is they take in all the trades in the last 30 seconds, okay, from the market. So let's say the S&P traded at 7 different prices or whatever, and I even talk about that a little bit here on the deviation levels at the bottom. And so like right here, let's say the S&P in the last few minutes traded at 1400, 1400.25, 1400.575, 1401, and 1404. They multiply that times the volume that it traded on that price during those 30 seconds. And then they get a weighted value. Then you take the sum of that price and they divide it by the total volume in the last 30 seconds. And by doing that, by putting that combination together, then they're able to get what they call the settlement price. And why is that so important? Well, floor traders use settlement price. Also, it's how they do mark-to-market on contracts. It's also how they determine if an option's in the money or out of the money and at what price to actually value an exercised option. So it affects a lot of things in the market. And, that's why, like I said over and over again, it's so important that you know what settlement is and not just that last trade. So if you're doing a gap fill trade, you need to do a gap fill trade based upon the settlement price, not based upon the last trade price on your chart. They will vary. Even on the CME, you'll see they'll often vary by as many as 2 or 3 points. And if you wanted to go for the gap fill and close it earlier based on the last trade price because it was closer, that you could do. But if that gap fill is further away, then you're going to have a lot of challenges with putting that together. So now let's open up a few of the charts and let's look at it and let's just see, like yesterday we had a gap fill on the S&P, and I actually consider it filled if it's within 3 ticks, just because of bid-ask spread, and I don't want to get kicked out. And so, I want to put all the pieces together. So let me look at that and pull it up yesterday, right over here. We got today, and you can see that gap, which normally I would actually take, but I did not take it due to what was going on in the markets with everything that's happened over here. So there we go. But you can see the gaps like filling right there, the gap right here, fill. So often these gaps do fill from where the market opens, but today it has not filled. Okay, and you want to make sure that you're always looking at that gap fill going to settlement whenever you're trading a gap trade. And what is a gap fill? Well, if the market closes at 415, then opens again at a different price, okay? So opens at 415, or closes at 415, opens again at 930, the cash market. And I'm not talking about the futures pit. So when the pit opens versus when the pit closes, and the difference in that price, that's the gap. And in between, the futures are trading. Well, all these stocks that are factored into the S&P 500, and there's all these limit orders that haven't been filled. And the market wants to go back and fill those gaps. All right? So if the market's trying to fill those gaps, then that's why you have a gap fill. Now, this is also why I did it on the indices, like the S&P 500 and the NASDAQ and the Russell. The Russell a lot of times is very fast. And the Dow. Now, the Dow only has 30 stocks, weighing it down one way or the other. So sometimes it has a slower time filling than the other ones. And today, yesterday was a good example of that. Didn't quite go back and fill. But we want to put all those together so that way we know where the market's at, we know what we're looking at, and we can take advantage of it, each and every day in our trades. And let's see here, load that up. When you're trading these gap fill trades, always look for that bond buying program so you don't fade the gap fills on days that the market's going up. I know we talked about that earlier, but this is a really good example of the 3.5 where it did not go down at all, and on 3.5 they had the big bond buying program. So, putting all this together, you're actually able to put together a solid trading plan. And I want to bring up a couple more charts for you and show you. Just look at today's gap fill trade. Okay, and we'll show you how it did not work out, and I expected it not to work out simply because of the bond buying. So right over here, put this back over on a 5-minute, and I'll maximize it. Put the chart there for you. Okay, so again, we did not expect this gap to fill because of the bond buying program. And then if we go over, when we look over at the S&P, then we can see the same thing happened. And it did not come back. Now the Russell shot down, got really close. And like I said, it got really, really close over there for us. But it did not quite fill the gap. I mean, it was incredibly close to that settlement right over here. But it came down and then pulled on back up, and it's been up for most of the day. And if we want to go in, and we can also look at the deviation levels. Let me show you this, and I'll open it up on the screen right next to it on the side, so that way I can pull up the charts right next to our Thinkorswim charts over here today. There we go. And then we can check out the deviations. And again, in the deviations area, you just click over here on current, right here. And what you're able to do is, again, I want to sort of walk through this. What you have is you have settlement, and then you have one deviation. One deviation is when about 68% of the expected price movement. So we don't expect the market to move further than that. And I always tighten the stops whenever there is a deviation. So right here we got 0.5, and that's a half deviation. That's going to be, we basically have a 60% chance of the market breaking out of that level. We have about a 32% chance of the market breaking out of a 1 deviation level. We have about a 3% chance of the market breaking out of a 2 deviation level, with a 0.3% chance of the market breaking out of a 3 deviation level. Well, if you understand how each one of these levels come together, and then we come over here and we look at the Russell, which right now is at a high of 933.1, and we go, well, what were our deviations? Well, the first one's 933.7. So, we're within a point of that deviation. So you got to be looking for, pretty soon to either have some oscillation or some choppiness, but it hasn't even broke half a deviation on the run-up it had today, based on the settlement price of yesterday being 927.9, which, like I said, was just 3 ticks shy. All right? Just 3 ticks shy of the fill price. And if we go over here and we look at a couple of the other markets, and we'll look at some bigger markets, because we know we had some big moves today on certain markets. And right here, all right, there we go. So we got the pound dollar on up, and with those bigger markets, what we're able to do is take advantage of the big moves. But look at that, this massive drop and then massive rise on the pound dollar that took place here over the last 24 hours. I mean, this is absolutely huge, and it got down to 1.4966. So was that an expectation within our deviations? And pound dollar 1.4966 was actually a 0.7 deviation level. And one of the things I say is, when we get down, when we hit those deviation levels, that's where we want to tighten our stops. And so you tighten your stop, and then the market actually reversed all the way back up. And you'd be glad you would have got out. Let's see, how high did it go right here? We can see we got a high of 1.5081. which 5074 would have been that deviation level, so you would have tightened your stop on that bar, and then it pulled back down. So you can use these to manage your profits. It's also where you could potentially look for potential reversals. You want to see the market going in the other direction. Before you take a reversal, don't just reverse off a deviation, because it can go to 1, 2, and possibly 3. But you definitely, no matter what, you want to be looking at the deviations to manage your profits. What about the euro dollar? Let's pull that up, because we had interest rate announcements and everything else coming out about it. And we'll scan that chart here. On the euro dollar, it moved on up to a high of 1.311. It was like 1.311. And 1.311 was actually above our 1 deviation, not quite to 1.5. 1.3077 was our 1 deviation mark. And so we could have easily tightened that stop. It's still going. It gave it plenty of room to run. So, which is great whenever you can have a solid up close that gives you the basically the benefit of allowing the market to run on up. And that's why I like the deviations, because as a trader, it's so challenging. Think about this. How challenging is it? It's so challenging to let your profits run. And because sometimes you just lose so much, you're just like, you're so glad to take a profit on a trade. And you're like, it's up. I just can't help myself. I just got to grab it right now. And you take it too soon, and it could have went a whole lot further. The deviations let you know, hey, you know what? At this point, definitely tighten your stop. If it comes back down, yeah, you're going to give some up. But you also could give up a lot more by getting out too early. And so with the deviations, you're able to go, you know what? When it breaks, in this case, 1.3077. So, and I'll pull that back up, 1.3077. So right here. So this is a bar that's actually closed above it. All right, that's the key, closed above it. Then we have a stop right below it. Look at this. I mean, it came right down to that, but we had our stop there. So we had a stop at the low was 1.3070. The low of this, pardon me, was 1.3070. We would have had at least 2 ticks below. 2 ticks just because of a spread. So however wide your bid-ask spread is. So I want to have a 1 tick plus the bid-ask spread. So, we Euro-dollar, usually you're looking at like 1 tick on bid-ask spread. Other markets you may have 2, 3, 4 ticks of bid-ask spread. So basically 2 ticks of below this, and it keeps moving on up. And so it let me stay in the trade longer simply because I used the deviation. Whereas when it popped up like that, and that was a massive move, and all of a sudden it pulled down, I'd been pretty nervous about just getting out. And I wanted to, make sure I don't give up my profit. And that gave me a precise, defined price level at which, at this point, I now need to tighten my stop. And if it comes back and hits it, I'm okay with that. But if it keeps going, I don't want to give all the money away. All right? So, that's where the big advantage is. It really helps you in defining how to manage your profit. And, risk management, we hear so much about risk management, which is crucial. I mean, without risk management, then you will get wiped out. Okay? So you'll be absolutely wiped out without risk management. But part of risk management, there's 2 sides to that coin, is profit management. Because if you have great risk management, you never lose more than $50, and that's awesome, but you only ever make 25, well, that's not so good. That's not risk management. So it's just a slow, painful death. So you want to have profit management so that way, you can maximize your profits while limiting your gains. Risk management involves both sides. It's really money management. So, and not just the risk side. And, there's all different ways, but I found, if I wait on like a indicator going the other direction, something that tell me to go the other way, by that time I've given up an insane amount of profit. And so that didn't work for me. And then what do? I mean, you've done the same thing, right? So you went in there and you're, okay, when I get a short signal, then I'll get out. Or when I have enough money, then I'll get out. Well, what's enough? I mean, is enough 500, 1,000, 5,000? Well, 500 sounds good to me. Yeah, but what if you could have made 5,000 a day? Well, if I could make 500, that'd be great. But yeah, but what if you lose 1,000 on average? Well, that's not so great, So you got to put the whole plan together. And I'd rather let the chart tell me when to get out and not the P&L. The P&L should be taken care of when I get in, before I get in. So I should say I will not lose more than this much money, right? So I cap my risk. I will not lose more than this much on the trade. So my risk will define how big my position is. So if I have a risk of $50, and I'm just throwing a really small number out there, but we'll say $100, and that's the most I'm willing to lose on a trade. And let's say this particular trade has a $25 risk. I can do 4 contracts, 4 shares, whatever. And so that risk defines that, but then I got to manage my profit. I need something objective to help me manage my profit. All right, we'll come back to this and go through a few more charts right after this break.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. Let's check out a few more of those deviations, see how we can put it all together, okay? And so what we got right here, pull this up, and let's check out, we had Aussie dollar last night, which had some big news announcements. But overall, you know, like I said, it shot down and then it came on back up. And so we can see right here in the evening, moved on down off that news. So let's go over here. But then it popped up and then it flew up pretty high afterwards. So we had a high right there on the Aussie of 1.0289. And if we go over 1.284 would have been our deviation level to take profit on. So like right there, we had a high 1.288, 1.289. And so right there we can tighten our stop and then it does pull back. But it serves you very well. It lets you let your profits run. And that's, I guess that's one of the big things is you got to learn. You got to learn to let those profits run. Yes, you have to have risk management. And that is more important than anything. But risk management includes profit management. All right, so let's put USD yen on the chart, because that thing is just, skyrocketed. And we got a high right now of 95.08. So over here, we go down to USD yen, 95.93. Then we went to 95.36, we've been 1.5. So one deviation, 94.93, is where we'd expect to tighten our stops. And as we can see right here in this bar that closes right there at 94.95, so there's 2 ticks above. We tighten the stop, and you can even see, just how big that bar is. There's a little pullback, and then we're able to take advantage of it. And you can go in, and you can also put, I prefer more than anything, honestly, to do the whole strategy based on 10-minute bars. So we can pull that up, and of course we get the same results over there. We go in, we can tighten it up, and you can try 5-minute bars, you can try 10-minute bars, whichever one works best for you, but either 5 or 10 minutes on the deviation stop method. And but it allows your profits to run. And let's see, so if I actually put it on 10-minute bar, looks like it may be a little bit different. Let's see, we got a close right there of 94.91, and we wanted to close above 94.93. So we actually didn't tighten the stop yet, but we did tighten it at 94.67. So let's see, let's take that over here, 94.61, 67, okay, at 67, not above it, 68. So right here, you put your stop down. You got to account for your bid-ask spread. All right. So either one of these bars right here, you have the bid-ask spread. It moves on up, gets you one last little run, and I guess you'd still be in if you're using 10 minutes, or you'd be out if you're using 5. If you're using 5, you'd have been stopped out of the trade. If you're using 10 minutes, you're still in the trade, and it looks like the pit's going to close here in about an hour, the futures pit. So always be aware of that too. FX traders sort of seem to forget that futures trade, or forex trades on the futures market as well, in massive, insanely massive volume. And one contract, 125,000 euros. Okay, now they have the minis and the micros. We're talking about the big trades, and pay attention to those pit hours, especially for the close, because you'll see some crazy things happen sometimes in those last 10 or 15 minutes of the pit hours. And a lot of times people don't even think about 3 o'clock p.m. Eastern time mattering. But it does matter when that pit closes. Same thing on gold. Be aware when gold closes. A lot of times you'll see a reversal off of the close of the pit on gold. And we get so used to Globex as electronic traders, we forget that there's a pit out there. And so that when that Globex, when that pit closes out there, the NYMEX, and they stop, 130, gold, 230, oil. You got 3 o'clock, 4x for CME. When they stop trading, a lot of times you'll see a reversal because the big boys have gone home for the day. And so just be aware of that. But start playing with those deviations. Check out the free trial on that and see if they help you. And feel free to call in or submit a help desk ticket and ask me any questions. I'll be glad to help you out. Hope you all have a great day and a safe day. I'll see you tomorrow.